Okay, g'day, Rudy here. So last time I did a video like this was when Telstra got struck by the famous shooting star at resistance levels, and since then it's peeled away. So this video is about the bank's turn. Okay, so essentially let's look at Telstra. It's probably the best one to look at. So these are weekly candles. So essentially it started the week here and then went all the way up and then finished the week right there. So that's about as bearish as you can get. Okay, so if we look at CBA, who's had a magnificent run, and for those of you who bought it down here, you probably don't give a toss. So if anything, this is a warning to do not buy banks. Well, especially for dividends, like you look at CBA, it's only paying you 2.8% at this level. But okay, so in history, we can see we've got a shooting star there, shooting star at resistance here, and we're at resistance here, and we've got ourselves a shooting star this week. So it doesn't mean it's going to crash. And obviously, the thematics around negative gearing changes proposed by the legend Elbow, lunchbox legend. It's going to slow down loan growth, you would assume, and all that blah, blah, blah. But I mainly focus on the charts because they factor all that into it. So CBA, we actually do own two banks in our portfolio, our model portfolio that we have on Substack, which you can join if you want. So CBA, ANZ. Now you can see ANZ's 2015. This is the high of ANZ. So we're basically at a pretty strong level resistance zone. So there's shooting star there. There's no giveaway there. Couldn't have picked that. But this week we got another shooting star at that long-term resistance level. We've also met some targeted moves. The declining wedge breakout target here. So that's a sell. NAB. So again, NAB 2007. So you bought NAB in 2007. Obviously, you've cleaned up some divvies. But we are now back to where we were at 2007. There's a shooting star at resistance there. Excuse me. Shooting star here. Couldn't really pick that one. Now this NAB is actually in our, I call it the dividend tank. We have ninjas and tanks. So we actually did buy this back here. It only started in May, this particular dividend portfolio. So again, we got at resistance, a measured move from the declining wedge, gives us a target around this level, and we can see a shooting star. So I'll be probably selling NAB from our dividend tank portfolio. And then there's Westpac. So Westpac, 2015. Back at the 2015 highs. So we can see shooting star back here, capped it. Pretty hard, wasn't one around there. But again, we got some, that's where we picked it up. Got our targeted move from the declining wedge break here. And we can see we've got another shooting star. So again, we'll probably be selling Westpac from the dividend tank portfolio this week. All right, and there's just a few other, so it's not one of the banks, but like QBE. This was in our tank. We did recently sell this. It's back here actually. Started having shooting stars at so our targeted projection. Well, we bought it down here on the breakout, and so we had a measured move of here. So even though we're missing out on the div, we've move on to other stocks that you need a sort of at least 5% divvy to make the portfolio. So QBE was a sell back here. All right, let's give you something to think about, and have a good one. See ya.